Okay, let's unpack this Eli Lilly. I mean, the name goes way back, right?
A
1876.
long history, yeah.
But then you jump to today, May 2nd, 2025, and suddenly they're the world's most valuable pharma company, over $713 billion market cap.
It's staggering, isn't it? The speed of that
So
rise.
what's behind that? That's what we're digging into today on the deep dive. We want to give you the essential picture, and honestly, it really boils down to two key drugs.
Well, and it's not just the growth, but how fast it happened. A company with those deep roots now right at the very top. So our mission here is to sort of break down what we're seeing in the latest reports. We've got an in-depth stock analysis from today, actually,
May 2nd, eh?
May 2nd. And we want to pull out the key stuff about Lilly, the business, the management, financials, what the market thinks, who owns it, the risks.
Right, distill it down.
Exactly.
Yeah.
Synthesize it so you get the core insights
Yeah.
without, drowning in data.
Think of it as your shortcut to understanding this pharma giant. We'll dissect the business, look at the strategy, and try to figure out what's really fueling that massive valuation. So, where do we start? The basics.
Yeah, let's start with the business itself. I mean, fundamentally, Lilly does what Big Pharma does.
Mm.
Discovery, development, making the drugs, selling them. Innovative stuff for humans.
And they have that history too, right? Penicillin, polio vaccine.
Absolutely. They were pioneers in mass-producing penicillin, big role in the Salk polio vaccine, the legacy of tackling major health issues.
Okay, but fast forward to now. Where's the money coming from today?
Mostly patented drug sales.
Yeah.
And it's really interesting. In Q1 2025, like 67% of the revenue from the U.S.
Wow, 2/3. So very U.S.-centric.
Yeah, definitely makes them sensitive to U.S. policy shifts, healthcare changes, that kind of thing.
Okay, so those two drugs I mentioned, let's name them. What are they and why are they such a big deal?
Okay, first one, Mounjaro. That's tirzepatide for type 2 diabetes. Q1 2025 revenue, $3.84 billion globally.
Billion.
Oh.
With a B.
Yep. And that's up 113% from the year before. That's that YOI growth we talk about.
Incredible growth. And the second one?
Zepbound. Same active ingredient, tirzepatide, but this one's for chronic weight management. It only launched late 2023.
So it's pretty new.
Very new. And it pulled in $2.31 billion in Q1 2025.
Okay, so add those together.
You're looking at nearly half of Lilly's total revenue, just from those two.
In one quarter.
That is amazing concentration.
It is. It shows their current strength, obviously, but it's also, a potential vulnerability. Relying so heavily on just a couple of products. That's a key takeaway from anyone watching Lilly.
Absolutely. So much riding on Mounjaro and Zepbound. What else is coming down the pike? The pipeline must be crucial.
Oh, absolutely critical with this kind of valuation. And yeah, they've got some interesting things. Orforglipron, for one.
Orforglipron. What's that?
It's a once-a-day pill. An oral GLP-1 receptor agonist.
Like Ozempic or Mounjaro, but a pill. Exactly. Mimics that hormone, lowers blood sugar, helps with weight loss.
Yeah.
They just announced positive phase 3 results back in April for type 2 diabetes. Showed good A1C and weight reduction. And the safety looked pretty similar to the injectables.
So when could that hit the market?
They're aiming for weight management submissions by end of this year, 2025, and diabetes maybe in 2026.
An oral option would be huge for accessibility. What else?
Then there's retatrutide. This one's an injectable, but it hits 3 targets.
Yeah.
GLP-1, GIP, and glucagon.
3. They're calling it the triple G, right?
That's the nickname, yeah. It's in late-stage trials for obesity, and the buzz is it might lead to even more weight loss than tirzepatide.
Wow. So they're really doubling down on the metabolic space.
Seems like it.
Huh.
But they're not ignoring other areas, Alzheimer's, for example.
Right. Donanemab, how's that progressing?
Well, it's an antibody targeting amyloid plaque. Phase 3 showed it slowed cognitive decline in early Alzheimer's, which is promising.
But there were safety concerns.
Yeah, the ARIA side effect, amyloid-related imaging abnormalities. Basically some temporary brain swelling or microbleeds seen with these kinds of drugs. Regulators are looking closely at that right now. The review is ongoing.
Alzheimer's is such a tough nut to crack. Okay, shifting gears slightly. I saw something about Lilly Direct. What is that?
Ah, yeah. That's their digital platform. Think telehealth, plus direct home delivery for some meds, including Zepbound.
So going straight to the patient?
Pretty much. It's a strategic move, bypasses the usual pharmacy route sometimes, a real shift towards direct-to-consumer. What does that even mean for how you might get medicine in the future? Big questions there.
Yeah, interesting. So from polio vaccines way back when to direct digital sales now, where does this put them overall?
Well, like we said up front, world's most valuable pharma company right now. They're one of the 2 big players in GLP-1s, obviously, but still have significant muscle in oncology and immunology, too.
Okay, so long history, massive growth now from these two drugs, a promising pipeline, top market spot. But how did they manage that leap? What's the secret sauce? That's what I'm really trying to get at.
And that's the perfect transition. It leads right into looking at the people running the show, the management.
Right, who's steering the ship?
The person at the top is David A. Ricks. He's been chair, president, and CEO since the start of 2017.
Okay, since 2017, and the stock's performance under him.
Well, consider this. The market cap is up nearly tenfold during his tenure.
Tenfold. Okay, that's significant.
It really is. His 2024 compensation was reported at $29.2 million, which, is a lot, but you see it in the context of that massive value creation.
Fair point. What about transparency? Are they open about what they're doing?
They seem to follow standard practices, quarterly reports, annual reports, active investor relations, regular calls, the usual disclosures. They've even talked specifically about things like potential tariff impacts in their updates.
Okay, sounds standard. But what about the ethics side? Their reputation?
It's a bit mixed, isn't it? On one side, you've got the Ethisphere Institute naming them one of the world's most ethical companies.
Okay, that sounds good.
But then on the other side, you have the whole major controversy over insulin prices historically. The lawsuits, the public pressure.
Right, leading to that $35 monthly cap and settlement.
Exactly.
Yeah.
So it's a real contrast. How do you square being named most ethical with facing that kind of criticism on pricing? Does one cancel the other out for investors or patients? It's tricky.
Yeah, the insulin issue definitely raised a lot of questions about access and affordability for essential medicines. Still does.
It really highlights that constant tension in pharma between profit and patient access. Okay, but let's look at governance. How are they structured to be accountable to shareholders?
Good question. What's the board setup?
They have a lead independent director, which is generally seen as a positive thing for independent oversight. And interestingly, for this year's 2025 shareholder meeting, they're proposing to declassify the board, meaning directors are elected annually, not staggered terms, and also get rid of supermajority voting rules.
Both generally seen as pro-shareholder moves.
Typically, yes.
Yeah.
Makes the board more directly accountable each year and makes it easier for shareholders to enact changes.
So it seems like they're listening on governance. What about how they spend their money, capital allocation priorities?
Priority number one seems to be reinvesting. Big time into R&D, that's the future pipeline, and also massive spending on manufacturing capacity. Got to make all that Mounjaro and Zepbound.
Makes sense. Anything else? Dividends, buybacks.
Yep, they pay a consistent dividend, and it's been growing. Plus, back in December 2024, they okayed a huge new share buyback program, $15 billion.
Okay, $15 billion buyback signals some confidence. So, summing up management. Strong performance results, CEO tenure marked by huge growth, but that ethical question mark around insulin pricing lingers.
That seems fair. Which naturally leads us to the financials. Does the math actually support this sky-high valuation?
Exactly. That $713 billion market cap. Let's get into the numbers as of, May 2nd?
Right. So the share price closed at $794.10. Interestingly, that's actually down a bit from recent highs.
Okay. What about the classic valuation metrics, PE ratio?
The trailing PE looking back 12 months is around 76 times earnings.
76? That sounds really high for pharma.
It is. Historically, Lilly's been closer to maybe 51 times, and it's way above most of its big pharma peers right now. Suggests huge optimism about future growth baked in.
What about looking forward, the forward PE?
Still elevated. Based on estimates for fiscal year 2025, it's around 37 times. Still high.
And price to sales, PF?
About 15.8 times trailing sales. Again, historically, Lilly was often under 5 times, and competitors like Merck or Novo Nordisk are much lower.
Price to book?
Exceptionally high. Somewhere between 45 and 57 times. So all these metrics are flashing the same signal. The market expects years and years of truly phenomenal growth and pipeline success.
So the condensed takeaway is huge expectations priced in. Any slip-up could be painful.
Precisely. High wire act.
Is the revenue growth actually matching those expectations so far?
It has been accelerating dramatically. The 10-year average growth was around 9% a year. But 2024, they grew 32%. And Q1 this year, up 45% compared to Q1 last year.
Wow, 45% year over year?
And their own guidance for the full year 2025 suggests growth around 32% again. So yeah, the revenue growth has been remarkable.
Okay, top line is booming. What about profits? Margins.
Also very strong. Gross margin. The profit after making the drug is consistently high, like 81, 83%. Q1 was 82.5% on a GAAP basis.
That's healthy. Operating margin.
And it improved significantly, too. It's up in the 39, 43% range recently. Net margin is also trending up, so profit looks really good.
Great margins. Now, the balance sheet. All this growth and investment, are they taking on a lot of debt?
They have, yeah. Total debt is up significantly, somewhere in the $33 to $35 billion range.
Okay, that's a chunk of change. How does that look relative to equity, debt to equity?
It's high-ish, around 2.3 to 2.45 times. So definitely leveraged.
But can they handle that debt? Interest coverage.
Yeah, that looks very strong. Their earnings cover their interest payments somewhere between 17 and 29 times over. So they can comfortably handle the payments right now.
So manageable debt for now, thanks to strong earnings. But you have to remember where those earnings are coming from.
Exactly. Heavily reliant on Mounjaro and Zepbound continuing to perform.
What about cash flow? Are they generating cash?
Operating cash flow is strong, around $8.8 billion over the last 12 months. That's cash from the core business.
But free cash flow, after investments.
That's where it gets interesting. Free cash flow has been squeezed hard by all the money they're pouring into building new manufacturing plants. It might have even been negative in 2023, and it's still pretty low recently.
So spending a ton to build capacity, which makes sense, but...
But it raises the question again. Can these sky-high valuations hold up with that debt level and the current pressure on free cash flow? The market is clearly betting yes, betting those investments pay off big time.
It's a big bet on flawless execution, essentially. Any misstep could really shake things up, given those multiples. Okay, so that's the financial picture. Let's shift to what the market, the analysts and investors are actually thinking right now. What's the sentiment?
Generally, analysts on Wall Street have been positive. Most ratings are buy or strong buy.
But, I feel a but coming.
But yeah, after the Q1 earnings came out, there were definitely some concerns voiced, mostly about the slightly lowered profit guidance.
Which was due to acquisition costs, right?
Primarily, yeah. And also more noise about competition heating up for Zepbound in the weight loss market.
Anyone notably cautious?
Morningstar stands out. They rate the stock as overvalued, with a fair value estimate quite a bit lower than where it's trading, around $650, I think.
Okay, so mostly positive, but some caution creeping in. What about price targets? Where do analysts see it going?
The average or consensus target is somewhere around $990 to $1,020 a share.
But is there a wide range?
Huge range. Some analysts are down at $650, like Morningstar's fair value, while others are way up at $1,250.
Wow, $650 to $1,250. That tells you there's a lot of disagreement or uncertainty out there.
Absolutely. Really reflects differing views on how sustainable this growth is and how much pipeline success is already priced in.
How has the stock actually reacted to recent news?
Well, after that Q1 earnings report, the stock dropped pretty sharply, like 11, 12%.
Driven by that EPS guidance and the CVS Caremark news about Zepbound.
Seems like those were the main triggers, yeah. Before that, though, the positive Phase 3 news on orforglipron, the oral drug, had given the stock a nice boost.
So very sensitive to news flow, positive or negative.
Highly reactive right now, definitely.
What about short sellers? Anyone betting heavily against Lilly?
Doesn't look like it. Short interest is relatively low. Suggests most investors aren't expecting a big drop.
Interesting. And options activity, what does that tell us?
The implied volatility in options suggests the market is expecting continued price swings, especially around things like future earnings reports or big clinical trial results.
Okay, so summing up sentiment. Mostly positive analyst ratings, but cautious undertones emerging. Wide range of price targets showing uncertainty. Very reactive stock price, low short interest, but options market expects more bumps.
It captures it pretty well. Cautious optimism, maybe, with high sensitivity.
Now, let's look at who actually owns this company. Who are the major players behind the scenes?
Well, it's overwhelmingly owned by big institutions, pension funds, mutual funds, asset managers. They hold something like 83 to 88% of all the shares.
Dominant institutional ownership. Can you name some of the big ones?
Oh, yeah. It's the usual suspects. Vanguard, BlackRock, PNC, Capital Research, State Street, Fidelity, T. Rowe Price, Geode, PrimeCap.
The giants of asset management?
Pretty much. Each holds a few percent, single digits usually.
What about insiders, executives, directors? Do they own much?
Not a huge amount directly. Around 0.16% or so. And recent insider transactions reported have mostly been sales, often under preset plans.
Okay, so not massive insider skin in the game directly. What about the Lilly endowment? That's a unique piece here.
It really is. The Lilly Endowment is the single largest shareholder, hold about 10.1 to 10.7%.
And that's a private foundation, right? Set up by the family.
Exactly, a private philanthropic foundation. They've been gradually selling down their stake over the years for diversification, but still the biggest holder by far.
Does having a big foundation as your top shareholder change anything?
It probably does. For one, all that institutional ownership means those big firms have a lot of sway on things like corporate governance, ESG
It's
issues.
like maybe why Lilly moved on declassifying the board.
Could be influenced by that, yeah. And the endowment itself, being a long-term, philanthropically oriented holder, might encourage a more patient, stable approach to strategy compared to more short-term focused investors.
Interesting dynamic. So mostly big institutions, plus this unique large endowment holder. Okay, let's try to bring it all together now. Risks and opportunities. SWOT analysis time.
Yeah, SWOT is a good way to frame it. Strengths, weaknesses, opportunities, threats.
Okay, strengths first. What are Lilly's biggest advantages?
Number one has to be that dominant GLP-1 franchise with Mounjaro and Zepbound. Then there's the strong R&D pipeline we talked about. Their massive investment in manufacturing scale is a strength now. Good IP protection, solid financials, profitability-wise, and, a strong global brand.
Okay, clear strength. What about the weaknesses? Where are they vulnerable?
The valuation. It's just extremely high. That's a weakness because it leaves no room for error. Then there's the revenue concentration, so much riding on those two drugs, the higher debt level, the near-term free cash flow pressure from all that CapEx, and that lingering reputational vulnerability around drug pricing from the insulin history.
Got it. Strengths and weaknesses laid out. Now opportunities. Where's the upside?
The obesity market itself is just enormous and still growing fast. Huge opportunity there. Pipeline success is obviously key. For glipron, retatrutide, donanemab hitting would be massive. They could also find new uses, new indications for their existing drugs, getting more efficient in manufacturing, growing that Lilly Direct platform, and, like everyone, leveraging AI more.
Lots of potential growth levers. Okay, finally, threats. What could derail this train?
Competition is fierce, especially Novo Nordisk breathing down their neck in GLP-1s. That's number one. Then there's pricing pressure, government regulation like the Inflation Reduction Act in the U.S. Pipeline failures, always a risk in pharma. Yeah, those U.S. tariffs and potential trade wars we mentioned.
Let's pause on tariffs for a second. How big a threat is that, really?
Well, there's a baseline 10% U.S. tariff now on most imports. Pharma was initially exempt from some higher retaliatory rates, except on goods from China, which face very high tariffs.
And Lilly gets stuff from China or India.
Yeah, like a lot of pharma, they source APIs, active ingredients, and materials globally, including from China and India. So tariffs could raise costs, disrupt supply chains, could hit manufacturing costs. The CEO even warned tariffs could hurt R&D investment if costs go up too much. Plus, there's always the risk of other countries hitting back with tariffs on U.S. drug exports.
But Lilly's building a lot in the U.S. now, right?
Exactly. They're spending over $50 billion on U.S. manufacturing. The CEO basically argued that investment helps mitigate the risk, especially for the U.S. market. Their 2025 guidance didn't assume major tariff hits, but they acknowledge future escalations are a risk.
Okay, so tariffs are a threat to watch. What other threats?
Manufacturing scale-up challenges making these complex drugs at massive scale isn't easy. Patent challenges, rivals trying to invalidate their patents earlier, and just broad economic downturns affecting healthcare spending.
Okay, quite a list of threats. So wrapping up the SWOT, it's a powerful company with huge opportunities, but facing intense competition, regulatory pressures, execution risks, and that ever-present high valuation risk.
That sums it up well. The tariff situation just adds another layer of complexity to navigate.
So brief conclusion then. Eli Lilly, clearly a top-tier business, incredible growth from these GLP-1s, exciting pipeline. But, and it's a big but, trading at a valuation that demands near-perfect execution on all fronts.
Absolutely. The market has priced in immense success already. Very little margin for error.
Which brings us to our final thought for you listening today. We've unpacked this incredible rise of Eli Lilly, the revolutionary drugs, the manufacturing scale-up, the ethical questions, the global economic backdrop. Given all that complexity, what single factor do you think will be the most critical determinant of their future? Is it the science, the manufacturing, the regulators, competition, something else entirely?
It's a fascinating question to ponder. What's the linchpin?
Indeed. So our deep dive today revealed a company truly at the forefront of a medical revolution, But its continued success, as we've seen, really hinges on navigating this incredibly complex web science, manufacturing on a scale never seen before, tricky global economics regulations, that sky-high valuation. It demands they get it all right.
Flawless execution is the name of the game at this price.
If you found this deep dive valuable, if you want to keep unpacking the big stories shaping business and finance, hit that subscribe button so you don't miss our next exploration.
Links to the sources we talked about are in the description. And check out the Stock Analytics AI YouTube channel for more analysis, too.
And just a reminder, this conversation is for informational purposes only. It's not research or financial advice.
And we should note that artificial intelligence was used in preparing the source materials for this discussion.